Scalping trading actually has become pretty damn popular within the last few years. And it's mostly because a lot of people prefer fast profits against long-term trades, which is completely fine and completely acceptable. And in this specific video, I'm gonna teach you my best Forex scalping strategy for 2020, 2021 that can make you a lot of money if you follow it right. Hi everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. And if you're new to my channel and you're into binary options, Forex trading, crypto trading, or any type of making money online, this channel is for you. Make sure you hit that subscribe button below and activate the notifications bell icon so that you get a notification for every new video that I upload. With that being said, let's jump into the video. And before I actually jump into this video, I just want to give you a warm invitation to my BLW Trading Academy. In case you're a beginner trader and you're looking forward to learn all the basics in regards to day trading, including binary options and Forex, and more importantly, strategies to make money with day trading, such as scalping strategies, day trading strategies, or even swing trading strategies, then definitely this is the academy that you should take. And I do have a free training actually after the homepage where you can actually learn everything in regards to a day trading in general so that you can make an informed decision whether you want to go with this industry or not. So the invitation is right there, blwtradingacademy.com. All right, everyone. So I'm going to be using TradingView in order to show you this strategy, but you can use any other platform that you want, MT4, MT5, although I do believe that TradingView is the most accurate one, and therefore I'm going to be using it. So I'm going to jump to a different pair. Let's say USD JPY, and these are moving averages that I actually have right here with me, but you don't necessarily need to have all of them in place. So I'm actually just going to go ahead and show you 3 moving averages that you need to have, and I'm going to teach you exactly where you should enter the transaction and also how to set the take profit and the stop loss level in these pairs. Right now we are looking at, what pair is this one? We're looking at USD JPY. Okay, we're looking at a weekly chart. Let's go ahead and change it, and we're gonna be using a 5-minute chart for this specific trading strategy. Okay, I don't even know what I did here. So let me just go ahead and choose a different pair. Well, not a different pair, but a different chart. There you go. So here's the strategy itself. Now it's very simple, right? The first moving average, which is going to be a simple moving average right here. This one is going to be with the period of 6. This is the blue one that I have right here. Then you are going to add another one with a period of 14, and it's going to be a yellow color as well, simple moving average. And then you're going to get one for the period of 50, which is the red one right here. And the way it works, it's pretty damn simple. You're only going to enter when both of the moving averages actually cross the moving average on the period of 50. How is it that it works? You can do it both ways, honestly, but it's kind of like a second confirmation so that you can actually make more profits with it. For instance, let me get the drawing right here. What I'm looking forward right here is a crossover on the moving average with the period of 6 and the period of 14 on the period of 50. Okay, that's exactly what I'm looking at. Once that actually happens, then I'm gonna enter for a sell option. All right, now why is it that I'm actually doing this and not just one moving average? Because sometimes you might even see, like for instance, you can see that the crossover on the moving average of the period of 6 against the period of 5, and it drops a little bit, but then it keeps on jumping again. So in order for us to actually make sure that we are going to get a change on trending, which is what we're looking at, is that we need the period of 50 moving average to actually be crossed. So what we're going to be looking at again is actually the crossover of this line. You can even use only one moving average, which is the period of 14, but I wouldn't recommend it to you because you do need to have a clear idea as to what's going on with the period of 5, and but we're gonna go step by step. Step number 1 you're gonna look for a crossover on the period of 14 against the period of 50, like it's happening. Let's go ahead and see the last one right here, this one right here. Let me just go ahead and change the color to a blue color. There you go. In this area, this is exactly where it got crossed. Let me just go ahead and zoom it in. There you go. So this is where it crossed, right? And since this is where it crossed, let me just go ahead and get it a little bit bigger. Since this is where it crossed, you enter for a buy position, right? All the way over here. And what you're supposed to do is actually right here, I'm gonna choose a long position, and this is the candle where it started, right? This is the one, not this one, but this one right here. So you're gonna enter a long position, and what you're going to do is that you're gonna play around with the take profit, because yes, you might say, oh, this is the take profit, but then once it starts jumping, then you can play around. But the first thing that we're gonna set is the stop loss. All right, if the actual price, or if the candles start to drop and they cross again the moving average, then unfortunately that's gonna be a loss. So my recommendation is, for instance, here is the level where the moving average on the period of 50 started, right? This is the level. So I would go ahead and just choose the stop loss a little bit below that level, because if the actual candlesticks start to cross again the 50 moving average, then we're lost. Okay, then it's going to change in direction, just like it happened right here. For instance, this was a buy option. If you notice right here, it was a buy, and we entered for this position, but then boom, it crossed again the 50 moving average, and the stop loss, if you would have set it up like around this area, then boom, it got touched and it kept on dropping. So what is it that you need to do? You need to set up the take profit and the stop loss, I'm sorry, at a lower level than the 50 moving average. And what about the take profit? You can set it up in different ways. For instance, right here, I actually put it because there's a slightly resistance level in that area. So I actually put it right there. But what happens if the price starts to actually climb and it hits this area right here? Then you can move your stop loss to this area, right? Or to the entry point, whatever you want. Or you can leave it as it is, it's fine. But once it starts jumping, then you can actually move the take profit a little bit higher to this area, for instance. And then if you notice, it keeps on jumping, and this change of trending, it's a little bit more obvious. And remember, the more far away the 50 moving average is from the candlesticks, the stronger is the trend. So what you do is that you actually move the take profit, let's say around this area again, into this area. And then if you notice it didn't touch, it kept on jumping. So you move when you move the stop loss, you also move the take profit. Now you see that it broke another resistance level. So you move the stop loss to this area right here. Now you notice that it broke another resistance. So you move the take profit in this area, and you move the stop loss, let's say, to this area right here. And if you notice, it touched the take profit right here in this area. So easily, well, not easily, right? But in this specific position, we were able to make at least 14 pips. We could say 14. The take profit would be like around 20 pips and so on. And it was an easy trade. Wasn't it? Pretty simple. Let's look at the opposite option on a sell position right here. There you go. Take a look at this one. So it actually dropped right here. So this will be the entry point. Let me just go ahead and get a different color. Let's see, it's red one. So this is the entry point right here. So this is the candle where the entry point, right? Now, how is it that you do it? Again, is that you're gonna choose a short position, and this is the entry point. And where is it that you're gonna set the stop loss? You're gonna set it a little bit above the actual moving average, okay? A little bit above. And then the take profit, you can put it around this area. And then if you notice, it even went in the opposite direction a little bit, but didn't reach the stop loss. And then boom, started dropping. And then you can keep on managing, just as I explained before, you can keep on managing the take profit. And in this one, we have 28 pips in profit. As simple as that. Now this trade would have started around 16:45 and it ended at 20:55. So we're talking about what? 3.5 hours pretty much. And it was a pretty easy trade. Now, Maybe you might be wondering, well, but this is too complicated. Why is the another moving average right here? Because this moving average is actually going to tell you when there's going to be a change of trending, so that you can have an extra confirmation as to where to close the trade if you want to, of course. And here's the deal. When you actually see that the blue moving average crosses the yellow line, usually is because the candlesticks are going to be moving in the direction of the moving average with a period of 6. But if you notice right here, it jumped a little bit more. So you could have even thought, okay, I'm going to close it right here, but no, because then this moving average has started to draw back down again. So that means that yes, we have more profits to make. Then there was a slightly jumping here, and if you notice, it reached this level again, and boom, it dropped back down. But guess what happened here? If you notice, it actually crossed the 50 moving average. So then you close the transaction. There's where you actually can close the transaction. So for instance, you enter this one right here, I think, hold on, and you close it right. Where is it that it actually crossed? Oh, okay, it was this one right here. You close it here, and you're talking about 23 pips in profit. Pretty simple, huh? So that's how you can actually get the second confirmation. Now, I might make it a different video, because this strategy is not only a scalping strategy. I use it as a second or third confirmation of many other strategy that I use out there, but this is just for 5 minutes. You can give it a try. I recommend you to test it on demo. I'm gonna have a link below in the description of this video for IC Markets demo account, so you can get your own demo account just like this one, but of course on demo. And there you can actually get a $1,000 account, if I'm not mistaken, where you will be able to practice the strategy as much as you can. So let me know if you enjoyed the content of this video, and if in case you guys have any questions, you can put them in the comment section below. I'll be glad to answer those comments as soon as I can. And thank you for watching this video. Don't forget to subscribe, and I'll see you on the next one.